All right. Hey, good morning and welcome. Thank you for joining everybody that takes the time to do this. I know it's a really busy time of year and there's lots going on, but we do appreciate your time. All right, I'm just going to jump right into it here this morning, and um, as as we start, what I want to do is build just a list of everything that is bearish. So what I'm going to do is I'm going to open a new tab here, and I'm just going to start kind of writing down all the things that are out there, and then we're going to start looking at the charts. Okay. So number one, let's go soybeans first, right? Some of these are soybeans and corn. Some of them are just soybeans, but let's just go through the list. So number one, exports. Exports are behind on both shipments and they're behind on future bookings um, for soybeans. Let's talk about the USDA and the fact that they found 80 million more bushels um, uh, in the in old stocks than they had the month prior. Okay, so exports, let's say that's minus basically 300 million bushels. Let's say that this is minus, or they found uh, 80 here. And then let's talk about yield and about how that's going to increase in this coming report from 50.8 to maybe 51.3, maybe even higher. Who knows? Let's talk about that. Right, that's scary. That's not very bullish at all. Okay, so yes, I'll accept that. Okay, so we got a higher yield. We've got lower exports. We've got higher beginning stocks. What else is out there? Oh yeah, perfect planting weather in South America. We've got that going for us. The U.S. dollar is screaming higher this morning, breaking out into new highs. You've got, see here, what else? What's on our list, right? We've got the dollar. We've got perfect planting weather in South America. We've got increasing yields. We've got increased beginning stocks, and we've got decreasing and rapidly declining exports. So, I mean, these are big deals, right? I mean, if you plug all these into our balance sheet, our soybean balance sheet goes from a carry out of like 100 million to 350 plus. I mean, we go to oversupplied really quick, which would imply much lower prices. And I'm not putting this in here to scare anybody, but it's is all out there. This has been out there for several weeks. We've digested this now for what, 5 days of trading. This is coming. We've been talking about a much bigger yield for weeks and weeks, and as yield reports come in, they're all over the map. Some places are having records. It seems that as the deeper we get into harvest, the more variability that there is. South America definitely has perfect planting. But what comes with perfect planting is also potential weather scares, right? If you look at the outlooks in South America, it's not that great. It's actually warm and very dry. And then you've got the dollar screaming higher. If you take a look at what's happening on the energy side, everything is screaming higher and moving like crazy to the upside. And we're talking, all-time highs. Natural gas in Europe. Gail and I were talking this morning. Natural gas in Europe is trading the equivalent of $200 a barrel of oil. There's just a lot of geopolitical stuff happening. But why, with all of this terrible bearish news, when we look at the soybean chart, why are we as strong as we are? So even with all of that news, our weekly soybean chart is just now touching the 38.2% retracement of the entire move lower. And we found support off of it, right? We bounced right off of it yesterday. Now, a day does not make a trend, and certainly this week is not done. So, this bar could expand on higher. This bar could close right where it is, and it could work lower. So I'm not calling a bottom here, but the fundamentals are really so bad for soybeans, there is no reason why they have not just completely collapsed when you get right down to it. So I think that there's a disconnect. There's something not lining up, and that can be the price just hasn't caught up to it, and that can also be that the fundamentals aren't what the news is telling us that they are. So I think we got to be really careful before we jump to conclusions and let the price action tell us what it is. And we've talked about this for I think 5 weeks now, that we have been waiting for this line to test price action. Now, this line today is below price action where we were 26 weeks ago, but we're not closed yet, so you can't rush to judgment on what this means yet. I mean, if it closes back up in here, it's going to stay above it, and we could propel higher. If it does start to break below it, then we start to get nervous, especially as it starts to break into the weekly cloud, right? Once we're inside this cloud and below where we were 26 weeks ago, we start to change our opinion really quick. But I'm not sure that that's what's going to happen. And here is why. First of all, let's look at bean oil. Bean oil has taken off. With the energy moves that we've had, oil is screaming higher, veg oils are higher, and natural gas is higher. So this is putting us into an energy crunch. And so you've got soybean oil kind of leading the way back up out of here. And on top of that, you've got corn starting to show more strength too. And I'll get to that here in just a minute. But I don't think that this story is done yet. And I think it's more macroeconomic stuff holding it up here than it is soybean fundamentals. So whenever there's a huge disconnect, we've got to pay attention to price action. We clearly don't know everything that's happening. I don't know it, and I've been reading a long time here this morning, and we try to devour information, and we still don't know. So I can't figure out why we're not breaking soybeans harder, to be blunt, with those fundamentals that are out there. And maybe it's coming. Maybe we're just waiting on. The USDA report next week. I do think that we have significant risk in beans if that carryout swells to 350 or 400 million bushels. I think we've got significant risk in both this year and next year. So we may look at taking some action, but we're not uber bearish. And there's two reasons for that. First is the macroeconomic stuff happening, right? The dollar, the energies, all these things are providing support for some reason. But the second is what's happening in other markets. This is cotton. If I put cotton on a weekly chart, continuation chart, I mean, look at it. It's just screaming higher. So here's a daily chart of it, right? We're locked limit. We're trading it at 113. So if you're looking forward in cotton and looking at in a region that can grow it, that's going to buy a lot of acres, right? And you look at fertilizer prices, you look at energy prices, you look at what soybean oil is doing, and that's putting pressure on the corn market to secure acreage. So if we look at this daily chart of corn, it looks kind of okay. It doesn't look great. We're just still in this congestion area from that started back earlier this summer. We've just chopped sideways, and if we're going to break this market, I don't know why we haven't done it already. So with the forward-looking projections, right? You look at what profit margins are. We look at South America and its weather. It's hard to make a downside case for corn with acreage battles starting to pick up across the board. So I think corn's got to solidify and may actually take over and lead us back higher. So remember the soybean chart and this line back here, okay? Where are we in relationship to 26 days ago? We're below. We're starting to peak in, and if we can break above and get into this cloud area, corn could really accelerate higher here. The crop is known. We know we have a massive crop. Demand is pretty well known. We know exactly where we stand. and it's been underwhelming, which is why we've been pricing this in for months. So I think the bearish case in soybeans is being diluted by the bullish case in corn. If we're trading $200 a barrel oil equivalent in natural gas prices in Europe, and let's not say that oil here is going to go to 200, but let's say that it challenges 100. You know, we're trading at 80. Let's just say that we pop a little bit higher on oil. That puts ethanol margins extremely wide. That's got to be a bullish impetus to corn, and something that says we can't lose corn acres. So you look forward out into the next year's corn bean spread, and corn is starting to buy more acres, right? And I think that's going to provide support all the way back into this chart. Last thing that I want to show you on corn here is the weekly chart. Like soybeans, look at where we're at in relation to the cloud and in relation to where we were 26 weeks ago. We're testing, and we're coming right into a very critical point in time. I don't think this is bearish at all. I think that we're holding Fibonacci resistance. We've got a very choppy, sloppy price action that's happened since May. We're in a wave 2 position above our cloud. Same with soybeans. You know, this is textbook corrective behavior before a move higher. Now, I know I just laid out the bearish case in soybeans, and yes, I'm totally worried about it. But this technical picture is opposite what the fundamentals are telling us. And what would it take? You know, you got to ask yourself, what does it take? What are the ingredients that have to be in place in order to move a market one direction rapidly? Well, the first is you have to have the trade off balance. It has to be loading the boat to the other side, because you've got to squeeze the shorts and you've got to make people rush in to come and buy it. And so I think that this is a very strong potential of what could be happening here. We could end up with charts that look a lot like this. So I think the next 2 to 3 weeks is going to be really, really important. So what I want to see us do is start to move things out to March. I think we want to store as much as we can. I think we want to be extremely patient, and we want to watch things materialize. And I think we want to get out to March and May in every position that we have to make sure we've got the time in order to handle it. Now, I'm not saying there's not downside risk, and so we want to protect this and trade it with limited risk strategies, right? So I like being long puts or short futures with long option strategies that keep that upside wide open into this setup. You know, look at wheat this morning, right? You know, 15 minutes ago we were flirting with being down, and now we're up 6 just in the last few minutes, and that's in the face of a much higher dollar. So I think this market is set up and is preparing for a very significant move. And I think the weight of the overall evidence, while bearish soybeans, it's bullish corn, it's bullish wheat, it's obviously bullish cotton, it's bullish soybean oil, it's bullish energies, it's bullish crop inputs. All those things are working higher. And so I think that's going to overwhelm soybeans and push us to the higher side. So sometimes in this business, it's really hard because we've got to take a position. We've got to take a stand. We've got to have an opinion, right? And I know I'm bullish by nature, so you can discount this if you want, but I'm trying to be as objective as possible. With cotton doing this, and no one's talking about it, with energies doing what they're doing, I've got to think that something like this is about to unfold in the other markets as well, and I think corn's going to participate in that. So my advice is, yes, let's manage downside risk, let's shed it, but let's keep that upside wide open, because it can definitely happen here as well. Okay, let's look at balance sheets for just a minute. corn, right? We've got a report coming up next week. We tend to be, I want to focus on this column right here. What we tend to be doing here is increasing acres. We're kind of creeping them up higher, and we're increasing beginning stocks, and we're decreasing demand. We're doing all of those things and leaving yield about the same. So if yield, I think that's the top of the yield. From what we're starting to see, that yield should start to pull down. And regardless of short-term price action, this number is the key number, right? It's ultimately what's going to determine whether we work higher or work lower, because that's our carryout. And we've talked about this a lot. A carryout that is over 10% is bearish. A carryout that's below it just becomes parabolically more bullish because you've got a ration. And if this yield starts to tick lower and we start to pull this yield down into the 170 range, which is very likely, and we end up with a weather problem in South America, or oil keeps screaming higher, or the dollar implodes, or the market just decides, fund managers and speculators just decide that they want to play the inflation game. If any of those things happen, then corn can get very, very hot very, very quickly. So we're not out of the woods on corn. Soybeans, let's just think about what we did to soybeans here, okay? So if we increase our beginning stocks, hold on, I've got to make sure I'm on the right line here. If we increase the beginning stocks to 220, I think is what the number was, okay, that's not good. If we decrease our demand by that's supply, let's decrease our demand, our use, let's decrease that by 350 million, and this is not a good number. All of a sudden you're at a 500 million carryout. That's extremely bearish soybeans. I mean, that's $8 type beans. So I think that's too extreme, because the market would have already started pricing it in if something like that were going to happen. So I think we just got to stay tuned, and this number is going to end up being something more like down 75 million bushels, right? And what's pulling the number down? Well, a big part of it is the hurricane. And then the other big part of it is China has done everything they can to slow down their soybean grind in order to manipulate prices, right? What have they done to do that? Well, they fed all their wheat stocks. They closed all of their soybean crush plants. They've lied to us about their crop size, right? They've bought everything that they could from Brazil and depleted the rest of the world's supply, all to avoid buying from us. Why are they doing all that? I don't know. I don't have any idea. But I know that that's what they've been doing. And just because their numbers are down, their import numbers are down from us, doesn't mean that their demand numbers are down at all. Because they can't be, because they have too many people to feed. So that doesn't make any sense at all. But what's real is the fact that South American supplies are dwindling, the weather's not great, and maybe we had that all those extra bushels, maybe we didn't. The USDA just magically found extra bushels, and the cash market certainly was not telling us that at all. So could the USDA be wrong and the market already knows it? I think that's a very strong probability, especially given what's happening everywhere else in the space. All right, so I'm sorry to kind of bounce around all over the place, right? But let me wrap it back up. I think that the downside risk is limited, but real, if soybeans were to roll over. But I think that the fundamentals in wheat, corn, beans, energies, and inputs are enough to keep us on the bullish side, at least for now. If those things start to turn, then I think we have to start turning. Then I think we have to start managing more risk out in the future. But for now, I want to hold that upside wide open, because I'm a little bit worried that would catch the trade the most off guard is to turn the rest of the grain charts and make them look a lot like that coming up here in the next in the next few weeks. So let's be patient. Let's wait and see what happens. Let's just keep ourselves positioned for an upward move if it happens. But if it doesn't, let's keep ourselves in a position where if we break lower, it's not going to hurt. And that's exactly where we are. We're 70% sold. We're long calls, and we're just kind of marching forward. I think that's exactly where we want to be for now. All right, that's what I've got for the week. Please call us with any questions, and we're here to answer those questions and be helpful to you. There's significant risk in trading these markets, so please do so only in light of your own financial condition. We will talk to you next week. I hope you have a great one.